The housing market is saturated, the sellers are not getting the prices that they are asking for. So if you are a first time home buyer and if you're thinking of investing in a primary residence, is this the right time for you? Stay tuned till the end of this video to find out. If you're visiting by for the first time, my name is Michelle D'Souza. I'm a licensed financial advisor in Ontario. Real estate is one big investment that many people make in their lifetime. I would say that is the biggest investment for some of the people, and many people consider it as a dream as well. For me, house is a utility, and if there is no cash flow in that utility, if you're living in over there, if it's your primary residence, you wouldn't have any cash flow. So in that case, it's more of a utility, it's more of a long-term investment, and I don't look at it with any kind of emotional attachment. And I feel that is a good way to go about it, because if you're emotionally attached to your house, things go a little haywire. You should be emotionally attached to your family, to the people around you, and make memories along with them, but not with a house. But that's my personal opinion, and I digress. Let's get to the topic at hand. So I have looked at a few numbers of whether it would make sense to invest today in the housing market in Ontario if you are a first time home buyer. So let's consider, I have taken some online calculators. Let's consider a 1 million property and you have saved up for a down payment of 10%. If you know, the CMHCC insurance is only allowed for less than 1 million properties. So I have considered 999,999 just for the sake of getting the CMHCC insurance for a 10% down payment, or for the banks to allow you a 10% down payment. So if I do that kind of a calculation, then I end up having a mortgage of 927,000, which comes up to a monthly payment of about $4,726 per month. And this is a 5-year term, 25 years amortization. So with the principal payment and interest payment, note that since your balance is higher, you're going to pay a lot of interest in the initial 5 years. I've considered a fixed mortgage rate over here. If you ask me, generally variable is better, but then for my calculations, I've considered a fixed mortgage rate. Let's just consider a 5-year term, and let's consider this primary residence as an investment, assuming that you're going to change your primary residence in the next 5 years. And since primary residence doesn't have any capital gains tax, so that is also considered as one of the main investment vehicles for Canadians. So for 5 years, that is 60 months, you have a mortgage payment of $4,726 per month. The principal payments in 60 months amount to $124,544, and interest payments come up to $159,031. Obviously, your mortgage interest is much higher in the beginning of your term, and the total cost of both principal payment and interest payment comes up to $283,575. Now let's see how much of money you're putting from your hand into this property. You initially paid $100,000 as down payment. You also have to give land transfer taxes, you have to pay your lawyer fees, you have to pay your title insurance fees. So all of these fees come up to about $15,000, give and take, because first time home buyers have some rebate on the land transfer tax. So that's the reason I'm just putting it as $15,000, because assuming that you're buying this as your first home. So it is $115,000-ish upfront payment. And then over a period of 5 years, you're investing about $283,575 in this home. So your total investment, give and take, I'm going to round off some numbers just to make my calculations easier. Let's say 285,000-ish plus your 115,000 that you invested upfront. So a total investment of 400,000 in this 1 million property, right? Then now let's consider you want to sell after 5 years. Now, because you do not, maybe the interest rate has increased, things have changed. This was a fixed interest rate that I considered. So these payments and these numbers are fixed, right? But then say whatever your situation has changed, you want to go for a better house or a bigger house and you want to sell this property. So you have put 400,000 from your hands into this property. Now let's consider per year extra costs that will be added on this property. I'm not going to take the utility bills because these are the bills that you consume, but extra other expenses, right? You would have property taxes every year. For a 1 million house, easily it would come up to $4,000. So 4,000 into 5 years, you're going to pay $20,000 in property taxes. Then you're going to have some renovations on the house if you want to sell it after 5 years. Also, you would want to have you would have to stay in some other places while you want to sell the houses. So all of that costs you need to consider. Also, if you want some good buyers, if you want to make sure your contract stays, you would go with a real estate agent, and a real estate agent would take 5% of your total property value. That's the general number. I know there are agents who will do it for lesser cost nowadays, and I see those advertisements of 2% your property price, 3% your property price. I don't know how reliable they are, but the general agents that I have seen take about 5% between your buyer and the selling agent. It's about 5% of your property price. So all of that included, let's say you incur another 100,000 on just your property upkeep, maintenance, renovation, property taxes, all of this put together. So from your hands, you're putting about 500,000 on a 1 million property, and at the end of 5 years term, you would have a balance of about $803,354 with the bank. Okay, so now you want to sell it. Let's assume that after 5 years, your property price has increased 50%. Now I'm doing a lot of assumptions over here. Historically, these assumptions hold value because this has actually happened in Canada so far, and we are seeing a lot of immigrant influx. So 50% is an achievable target is what I feel. So if you consider a 50% increase in the property value, it comes up to $1.5 million. And remember the investment that you have put in, right? Over 5-year time period, you have put in an investment of $500,000. You have a $803,000 balance with your bank. So it's about 1.3 million that money that either you have invested or the bank has put in, right? Now say the house sells for 1.5 million. Now this is an assumption, but I think it is achievable. Let's not go into whether it is achievable or not, whether it's actually going to happen, but let's consider this as an assumption, right? So with 1.5 million as the selling price and 500,000 as an investment, and assuming that you have to give 803,000 back to the bank, you're still making about 200,000 profit on that particular house. This is, you don't have to pay taxes on your primary residence. So 200,000 over a 500,000 is about 40% gain over 5 years. So I haven't looked at the compound interest formula, but 40% in a country like Canada or US is actually a very, very good number. This is under the assumption that your house is going to sell at 1.5 million. Anything less than 1.3 million, it doesn't break even for you. Okay, so this is how I feel you need to put in the calculations for your primary residence. Now, if it is an investment property, calculations would be very different. But since majority of the Canadians look at primary residence as a house which could also be an investment, I think these calculations hold good. So I hope you found this video useful. So given these calculations, I feel buying a house as a first-time home buyer, even in this market with interest rates going so high, is, I assumed an interest rate of 3.69% for my calculation. So even with this interest rate, it makes a lot of sense if you have the means to buy a house and if you have the means to pay off the mortgage. if you're looking at it as a 5-year term investment. Now, this is my take on primary property, and if you have any comments on this, if this is what you think, please do give your thoughts in the comments below, and I would be happy to discuss this further if you're interested. Thank you so much for watching this video, and I hope you found my content useful. If you did, please do click the like, share and subscribe button, and I'll see you all in my next video. Adios.